Good afternoon. It's Jeffrey Christian of CPM Group. It's about 10 minutes after 2 on Monday, the 1st of September, Labor Day in the United States. I'm recording this now because there are places I'd rather be Tuesday morning. So we'll release it Tuesday morning, Tuesday afternoon, as we do or typically do with our videos, but I'm recording it now. I wanted to talk more about silver as a critical metal. The USGS issued a draft list of critical metals and included silver in it for the first time. And a lot of speculators have thought, well, this has got to be incredibly bullish for silver. We did a video last Friday in which we tried to have a realistic view of what it really meant for silver. And we've gotten a lot of comments, good and bad, about that. So I want to talk about that. And then I also want to talk a little bit about the greater value of being an intelligent investor. And we'll get into that. It's a topic that we touched on briefly last Friday. So first off, think and speak from a position of knowledge. One of the things that we've noticed is a lot of commentaries that are not particularly based on actual reality. A lot of erroneous information and beliefs and thoughts about silver, about critical metals, about government involvement. One of the key differences is to know the difference between a critical metal and a strategic metal. And, no pun intended, the difference is critical. A critical metal or material is essential to economic activity in a given country that has somewhat limited access to resources of that metal or material. A strategic metal or material is essential to military and government activity in a given country that has only limited number of sources that are largely in other nations that might be unwilling or unstable sources of supply to that given country. Those are the definitions that the U.S. government uses. Definitions vary somewhat from government to government. An example of a strategic metal might be platinum or palladium in the 80s and 70s, when the sources of platinum and palladium came primarily from the Soviet Union and then South Africa, both of which had political issues that the U.S. government would be worried about. And the U.S. government used platinum and palladium in a number of military ordnance, including a lot of electronic things. Changed, and platinum and palladium became non-strategic, and the government sold off at least its platinum, and I believe it sold off a lot of its palladium too, although I think it still has it. You have to know the difference because it's very difficult, and critical to understanding it. Next thing I want to say is, who do you trust? When you're trying to learn something about how much silver is used in various missiles and torpedoes and other military ordnance, whom do you think might know more than the other? The military that uses the ordnance, along with the military contractors that designed, engineered, and manufacture that equipment, and the groups that buy the silver and other materials and handle the regular recycling and recovery from retired equipment for the military and the military contractors, and the groups that are involved in that metal procurement and recycling. Do you trust them more than or less than you trust silver promoters who have been wrong pretty much about everything that they've ever said about silver? You still can't buy a house with 2 ounces of silver the way somebody said around 2008. They've been wrong about silver just about everything they've ever said, and they have no contacts with or involvement in the military procurement process. I'm not saying that you should trust governments. Anybody who knows me knows that I would never say that. But to trust experts in their fields much more than you trust hucksters and snake oil salesmen. And part of the problem is that a lot of hucksters and snake oil salesmen are now government representatives and officials. But below them are engineers and other people who don't have those political axes to grind, who pride themselves on being analytical and to try to get things right. If you talk to the military about silver, you get a radically different story than if you talk to a silver promoter. And you can choose who you want to invest based on. People who actually know what they're talking about, or people who have consistently led you down the garden path. It's yours to decide. Now, inaccurate analysis. Main one event made this comment. The one thing I found eye-opening is that, Jeff, the entire surplus was used up by American Eagles by 2021. It took 16 years to eat through that surplus. Those are above grounds that are gone, ground inventories that are gone. Now they have to go to the open market to purchase with everybody else. Okay, several things wrong. First off, the American Eagles used up the 137 million ounces in the National Defense Stockpile by 2001, not 2021. It was 16 years. It's probably just a typo. But that's the least of the problems. These were not surpluses. They were inventories. And much more important, they are not gone. They have been transferred from military ownership to private ownership. And again, who would you rather have owning silver? The military, the government, or individual investors? I helped create the Silver Eagle program, and I helped draft the submission to the Federal Register for the legislation enabling the U.S. Mint to create the Silver Eagle. And I drafted in that, and that was for Senator McClure, who was a Republican from Idaho at the time. And it put in that draft, I put in that we would be shifting ownership from the government to a stockpile of silver coins owned by and carried in the pockets, I said, for rhetorical flair, U.S. citizens. And the patriotic ones among those U.S. citizens would make that silver available should the military ever need the metal. But the military, starting in the late 1940s, said, we don't need a silver stockpile. Right? So they were not surplus, they were inventories, and they're not gone. They've shifted from government ownership to private ownership. Main event had some other comments that were almost unilaterally all wrong, and I won't bother to correct them here. He can buy some CPM group research if he really wants to know the truth. So what the USGS critical metals designation means for silver. One thoughtful, intelligent investor sent CPM Group an email, and he listed some of the things that might be positive for silver prices in the fact that the USGS draft list of critical metals now includes silver. They're worth considering, analyzing, and discussing, and that's what I'm going to do over the next several slides. He wrote, silver will be officially recognized defense used in military, energy, essential to solar panels and EVs, technology, integral to semiconductors and 5G infrastructure, and a lot of other technologies, by the way. First off, worldwide defense use of silver is around 50 million ounces. We've discussed that in previous videos. You can go back and find them. The use of silver in large missiles is around 5 ounces per missile. It's not 50 kilos or 50 pounds or whatever it was that the hucksters have been saying and continue to say, and a lot of gullible people believe. When I mentioned to some of the military contractors that make those large missiles that people were saying it was 50 pounds of silver or 50 kilos of silver, whatever it was, they laughed. They said, these things would be like, that's probably the weight of some of these missiles. And they said, we might be telling the Pentagon that because we charge them so much, but it's probably around 5 ounces of silver per missile, right? The military has stated annually since at least the early 1950s that silver is not a strategic metal. It doesn't need silver in a strategic stockpile. It doesn't want silver in a strategic stockpile. When the Treasury got out of using silver in coins, a lot of that, the Treasury had like 2 or 3 billion ounces of silver that were used in coins and sold off at 80 cents an ounce, $1 an ounce, $1.21 an ounce in the 50s and 60s. When it finished and got out of the silver coin business in the mid 60s, it had 137 million ounces of silver left. And it transferred that to the Defense Department, to the National Defense Stockpile. The Defense Department said, we don't want that. The Treasury said, well, we don't want it. And the Congress and the administration in the 60s said, take it. So the U.S. military inherited 137 million ounces of silver it did not want. And every year it would put in its National Defense Stockpile report, we want to sell that silver. But the Congress has passed a law that says we may not buy or sell materials for the strategic stockpile if we're going to disrupt the pricing in the broader public market. So from the late 60s into the mid 80s, that silver sat there, military saying, we really don't want it, we'd like to sell it, but we can't sell it because there are people in the Congress who represent Western mining states that say we'll be driving the silver price down, manipulating it, suppressing it, whatever you want to call it, and therefore we can't do it because they would complain. The Silver Eagle came along and we said, hey, let's use that National Defense Stockpile. We won't be selling silver that investors don't want because the Silver Eagle legislation says the Mint will sell Silver Eagles that the investors want. It's very important to understand that the wording didn't say as many Silver Eagles as the investors want. It said, we'll only sell Silver Eagles if investors want to buy them. Right? So you're not depressing the physical silver bullion market, and you're not depressing the silver price. You're only selling to investors who want to buy it, and they're coming to you and buying it. The military doesn't see silver as a strategic metal. Again, the military, including the Defense Logistics Agency, which manages the National Defense Stockpile, is part of the Defense Department, doesn't see silver as a strategic metal. But the USGS understands that, smarter than some people on the internet. And they said, yeah, it may not be strategic, but maybe it's critical. Let's see what the public thinks. So there's a 90-day public commentary period that people can send their opinions to the USGS, which take those opinions into consideration and then issue to other parts of the government its list, 2025 list of critical metals and materials. Right? Now, silver is crucial in solar panels. It's also important for electric vehicles, and it's also important for vehicles that are powered by gasoline products, diesel or gasoline, petroleum products. A typical ICE-powered vehicle using petroleum product fuel uses about 1 ounce of silver, maybe a little bit more than 1 ounce of silver now per car. A electric vehicle uses about 1.5 ounces of silver per car. So electric vehicles, not quite as dramatically important. Now, there has been news about a lithium-ion battery that uses silver that has been being developed and is in the research and development phase. The company in Japan or Korea, I can't remember which one, that is developing that is focusing on these little button batteries that are used in phones and consumer electronic products. It's not looking at electric vehicles per se for a variety of reasons. First, it wants to focus on these other markets. And the second thing is it understands that if those batteries were to be broadly commercialized in the electric vehicle market, it would drive the silver price so high as to render those batteries uneconomical and non-competitive, and that market would disappear. More than 20 years ago, CPM Group was working with a company that had been working on a silver battery for cell phones and for laptop computers. And they had been doing the research and pre-development work and development work for many years. And they came to CPM Group as they were approaching development. And we said, okay, they said, let's look at our technology. Let's look at the market for cell phones and the market for laptop computers. And you remember the number of cell phones that were being made and sold worldwide in 2002 were much fewer than they are today. He said, let's look at this market and say, what happens if the cell phone market and the laptop computer market switch from lithium-ion batteries to these silver batteries that we're developing? And the answer was, you would use so much silver that the silver price would skyrocket. So they said, okay, well, that's not good. And we worked with them on developing a program whereby they could use silver in their batteries, buy the silver, sell you the phone, lease the silver, own that silver, recycle it at the end of life of that product, and thereby reduce the effect of the impact on the price of the product, the cell phone or the laptop computer, of higher silver prices. And they would actually do well because they would own the silver, and if the price of silver went up, it would be an increase in the asset on their balance sheet. So we developed this way to do that, but we were doing it in fully understanding that if that technology were commercialized, it would drive the silver price way higher and drive out a lot of other uses in the silver market. Well, the silver price got ahead of those people, that technology, and it rose from $5 to $10 to $20 to $50 and then back down to $10. And that basically meant, no, it's not going to happen. The company didn't really throw away its technology. It found that by using it in really small button batteries, especially for hearing aids, they could have a recyclable battery for a hearing aid. And the price sensitivity of those batteries is much lower than the price sensitivity for cell phones and laptops. And they realized they could have as much profit using their silver battery technology in smaller products that used a few 100,000 ounces of silver a year, rather than they could have the same profits in a much smaller impact on the market. They wouldn't have to worry about what they were doing to the price of silver because they were only using a couple 100,000 ounces a year. That's what happens with new technologies. So people who are getting all excited about these new EV batteries don't understand that the introduction of new technology is partly dependent upon the availability and the price of the products. I mean, we worked with companies in the 1980s that were looking at ruthenium and iridium to replace the rhodium in auto catalysts, catalytic converters. And they realized there was not enough iridium or ruthenium to replace the rhodium, that they would drive the price sharply higher, and the world would run out of iridium and ruthenium, which had large inventories at the time. So you have to understand that. The aluminum industry would love to use scandium. They would love to use it in airplanes and ships. They would love to use it in golf clubs and tennis rackets and baseball bats. But there's not enough scandium presently mined to allow the aluminum industry to broadly commercialize aluminum scandium alloys. There are some of those alloys in play now. There are people looking at scandium mines. CPM Group was actually doing an update of its scandium research, partly because people are looking at scandium-rich mineral deposits. But the scarcity of scandium and the price of scandium has kept it from being broadly commercialized in a host of applications that have been developed decades ago. And it's true not just of scandium, but of a lot of other metals and commodities. So you have to pay attention to all of that. Curb your enthusiasm. The new silver lithium batteries, as I said, they're focusing on consumer electronics right now. Massive use of silver in EVs would make them uneconomical. And yes, silver is integral to a range of electronic applications and other applications too, including biocides and including medical equipment and including things that are used, salves and bandages for burn victims. Silver is a critical metal in a number of applications. Continuing on this, the investor wrote that the designation meant that silver could be prioritized under the Defense Production Act. And that's true. And we wrote and talked about this in 2024. There's a video someplace about this. That's one of the last things that an investor could want. Because once the government says, oh, silver is now prioritized under the Defense Production Act, that means the government can say, okay, you're going to mine silver. You're going to refine silver. You can't use silver in this product. You can't use silver in that product. They can commandeer supply. They can prohibit investment demand. Silver is a critical metal. You are not allowed to own it. Turn it in. Yeah, that really goes well with investment demand. And they can also prohibit its use in various industries. So this is not a particularly positive thing for the price of silver. Government funding for domestic mining, by the way, if you look at it historically, not just in the United States, but pretty much around the world, has most often resulted in a loss-making mining operation. And again, the Defense Department does not want to build silver stockpiles. The DLA stockpiles strategic metals, not critical metals so far. There's pressure in the Trump administration to include critical metals in the National Defense Logistic Agency stockpiles, National Defense stockpiles. But since the early part of the 20th century, when the Civilian Preparedness Board was created prior to World War I, the defense stockpiles have not included critical metals, strategic materials, including things like penicillin. Then the investor wrote, okay, well, look at government stockpiling and subsidized mining could tighten supply. Well, government, again, the military says it doesn't want to stockpile silver. So you can smoke whatever you want and believe that it's going to be stockpiled, and who knows what Hegseth would do, right? But he doesn't have the final say in that. Subsidized mining would not tighten supply. Government diktat in other areas might, right? The only positive thing in this guy's list of things is that the critical speculative interest may surge as investors anticipate policy-driven demand. So the only positive potential outcome that I see in the list of things to note about the USGS draft is that the critical metal suggestion is that speculators might pile into the silver market thinking it means government purchases in the near future and so things like that. And that's what, the snake oil salesmen want you to believe. Remember this, in the late 1960s, early 1970s, the U.S. military said, okay, if you're giving us 137 million ounces, we want to sell it. By 1986, almost 20 years later, they had not sold any of it. defense stockpile, critical national defense stockpile, moves very slowly. I would not expect you to see them buying silver in my lifetime. Right? And the USGS has suggested that silver be considered a critical metal, not a strategic metal. Also going into that, the investor or global trade dynamics. Yeah, the U.S. imports a bunch of its silver right now, mostly from Mexico, and any trade disruption under tariffs could spike prices. That's true. First off, the U.S. has tremendous capacity to be a major silver producer, a larger silver. It's already a major silver producer, but it could be an even larger silver producer. It has enormous reserves and resources. We have client companies that are working to develop some of these. It hasn't realized that for decades, but it could be a major producer of silver, which would not necessarily be positive for silver. And do not conflate trade disruptions due to tariffs and other government policies with the USGS's draft suggestion that silver be considered a critical metal. So you put all that together, and it's a sobering issue. I'm not trying to convince people to short silver the way some fools put in the comments. Deluded idiots. They really are American idiots, except that one of them is in Australia. At least one of them. I know two of them in Australia. I'm not telling people don't invest in silver. I'm telling people invest wisely in silver. Don't believe all of this garbage that you're hearing about silver in EV batteries, silver, 50 pounds of silver in a missile. All of that stuff is coming from people who have been traditionally dead wrong in their gold and silver prognostications, and really either don't know what they're talking about or choose to practice the currency of misinformation and disinformation because they want to sell products. Speaking of investing wisely, this chart I used last Friday, this is a chart that we've kept since 1980. December 1980, we started keeping track records of our intermediate, 2 to 3 years. If an investor comes to me and says, as the first trading day of December 1980, someone said to me, should we buy gold? I said, no, gold's $595. We are in a deep recession. We have all kinds of other issues going on. Inflation is coming down thanks to the Fed's tightening interest rates to 21, 22%. Don't buy gold at $595. We think it could fall to $350 or $320. By the middle of 1982, the price was $320, and we issued a buy recommendation. Then we said sell it when it got to $420. Then we said buy it when it got to $246. And then we said sell it when it got to $444. And then we said buy it when it got to $330. And from 1980 until 2000, we went back and forth. Buy, sell, buy, sell. You're not going to sell, at least take your profits and stand aside, put your money in treasuries, wait until we tell you to buy. In November of 2000, we said buy. In January of 2012, we said sell. And in April or May of 2013, we said buy. Now, that buying and selling, we'll get back to in a second. I also used this chart. Yeah, it was very funny because in our August 7th PM Precious Metals Advisory Monthly, we said that we thought the price of gold could get to $3,500 in August and $3,600 in September or October. And for most of August, the price was trading around $3,300, $3,400. And then in the last couple of days, it rose. And in the final trading day of August, it broke first to $3,500, and then it came back off. And then it went up to something north of $3,500. And that's where we'll start September. So I thought it was pretty funny because over the course of August, people were calling me all kinds of names because we had said that we thought the price of gold could go to $3,500, and it hadn't. One day does not make a genius. Now, going back to those intermediate terms, and you might not be able to read this thing, or maybe you can. We said, what if you had $1 million and you bought gold, 3 different portfolios? First portfolio bought gold and held it from December 1980 until now. Now is defined, this was updated last time in August of 2024 when the price of gold was probably around $2,200, $2,400. So it's a little bit out of date. It would be even higher. But that $1 million would be worth 3.9. You would have earned on a compounded annualized rate of return 3.3%. If you had taken half of our advice, bought when we said to buy, and sold and gone into treasuries with your balance when we said sell, you would have had a compounded annual rate of return of 8.2% into last August. Instead of having that $1 million turn into 3.9 million, it would have turned into 30.7 million. The third portfolio is you would buy, you would sell, and you would sell. You would go short gold when we said sell. And that $1 million would have turned into $181.5 million, a 12.4% return. That is the value of investing wisely and investing the way CPM Group tells its clients to invest. If you had listened to Jimmy Rogers in 1980, and he was telling you gold was going to $10,000 within a couple of weeks, you'd be up, well, 300%, 3.3% return. If you had listened to us, you'd be up 18,000%, or 12.4% per annum. And the same is true of silver. Our last signal was a buy order recommendation issued in October of 2019. And again, you can see buy and sell, heavy back and forth from 1980 into about 2001. 2001, we issued a buy recommendation. We issued a sell recommendation in April of 2011. And then we issued that buy recommendation again in October 2019. And you can see that from 2011 to 2019, an investor who was not long silver really didn't miss out on a lot of opportunities. Now, when we were saying sell at $49 in the last week of April 2011, there were a lot of people who were assuring you that the price would be 100 or 1,000 or something else that was totally unrealistic, had nothing to do with the amount of silver reserves and resources in the ground, the amount of refined silver in coins and bullion bars spread around the world, mine production, fabrication demand, and other factors. We base our buy and sell recommendations on real fundamentals, not this hokum that the silver market's in a deficit, but the reality that there is more silver coming into the market from mine production and secondary supply than is being used in fabricated products that take the silver out of the silver market and change its nature into something in a fabricated product. And by the way, I showed this a few weeks ago. The silver secondary recovery is around 20 or 25% of total supply. So for the wag or the deluded fool who put up a comment that silver secondary recovery is de minimis, that's a weird definition of de minimis. Now here's our silver price projections from our August 7th PMA. And it's very funny because, again, we had said in early August that we thought the price could touch 40 in August and 41 in October or November, September or October. I'm sorry. And the reality is that this has been updated. The reality is that the price got over $40 in the final trading day. I apologize. This has been updated for the September contract. And then again, if you look at those intermediate term returns and you say, what could you have done? If you had just bought silver in December 1980, you'd be up 1.3% on a compounded basis. Your silver would be worth 75% more than it had been in 1980, not adjusted for inflation. If you had bought and then gone to cash when we said sell, you would have had a 10% compounded return, and your $1 million would be worth $68 million. And if you had bought and sold the way we had advised our clients, you would have an 18% return. Pretty good. That's the value of investing wisely based on real research and not taking the advice of someone who's trying to sell you silver or gold. I'm particularly not fascinated by various people's wildly inaccurate representations of CPM Group and me from positions of clearly total ignorance and delusion. People make aspersions about my background, clearly not knowing where I grew up, or my education, or what I've been doing in the last 50 years in the commodities research space. Most of CPM Group's revenue comes from the investor side of the market. Our advice primarily focuses on physical investments in precious metals. Do you buy and hold gold, silver, platinum, palladium, or other commodities? Or do you sell it? We use options and futures to enhance returns for sophisticated investors. The last time we looked, less than 1% of our revenue came from bullion banks. It may be closer to 2% now. And if you knew anything about CPM Group, and most of the people who post comments don't seem to, there's one guy who knows a lot about me since 1975, I guess, yeah. If you knew anything about us, you would know why bullion banks do not particularly like CPM Group. But that's another story. People pay us to be right. They don't pay us to be bullish. They don't pay us to be bearish. And most of our clients are on the investor side of the market. You can say anything you want about me. I really don't care. You can go to our website. You can buy our gold and silver and platinum yearbooks. You can subscribe to our precious metals advisory. You can read all kinds of free reads, see videos there. You can send us a note at info@cpmgroup.com saying, I would like to join the CPM Club. How can I work with you to improve my investing in precious metals and commodities? That's all I have for now. Take care of yourself. Take care of those around you. Do something good for the world. And we'll talk to you at the end of this week.